Okay, folks, welcome and happy Martin Luther King Day. And hope everybody had a good extended weekend. And okay, Teasy Burton kicks it off with Rangers at Anaheim Ducks game tonight. Go Rangers, even though I'm an Islanders fan, to be honest with you. But I got to go with the Rangers. Okay. Let's get to it. So we did have the futures market that was open for half a day today, abbreviated day anyway. And it was a very rough go not a very rough go, it was a rough go for the futures, at least the NASDAQ futures. That's all I really watched. And natural gas, of which we have a long position in now, opened up a new contract. But that new contract propelled the futures action or futures price up at current 15% in a single day. Now we're long of Boyle. That's a 2 times leveraged fund. So that fund, if we hold these gains here, could open up about 30% higher tomorrow. And for members, I'll probably be looking to sell that rip, at least a portion of our position. Okay. And it's just a swing trade. It's never an investment, right? Boyle is a leveraged product, time decay, still in a downtrend. So we're going to fade the rip on natural gas, assuming that we hold these gains. You never know. It's a long time between now and the open tomorrow. So that's that. Let's say hello to Franklin. Welcome. Corey, been a while. All right. I don't expect a ton of folks today, but let's get to it. All right. Mr. Sean, welcome. Okay. So let's just go to a higher level view on natural gas. Let's go to the weekly chart. So we're right up at that 21 period EMA in orange. That's a natural resistance level. So again, we want to sell that rip. Doesn't mean it can't go up higher. I just want to see if it could close at or above that mark. If many times you'll get a big rally and then it fades by the end of the day. I don't want to lose that profit. I'm greedy. And then we can always reestablish on an orderly pullback, a higher low, etc. Well, that's natural gas. Let's stick with the energy space since we're on natural gas anyway. Crude oil, we expected a breakout last week. We got that breakout. Up at current, 0.10%. Here's a 4-hour view. Here's the breakout. We broke out here, fell back, broke out yet again, finally got through this resistance. So we've pulled back, looking for another higher low on oil. I just wanted to check the weekly view. And you can see here, as I just mentioned with natural gas, this is a natural resistance level, that 21 period EMA. So we ripped through it. We couldn't hold it. And this is the exact reason why I want to exit stage right on Boyle tomorrow morning out. And that only assumes that we hold these gains. We just went negative, but these are thin markets right now. Wide spreads, thin markets. Let's head on over to the currency markets. Now, remember, these markets were trading today. The dollar down pretty measurably after having a very strong few weeks. Let's go to euro yen. Euro did not have a good week last week. What the hell just happened? There we go. Let's clear that over. The euro is up 0.43%. This is a pretty big move on the euro. Now, we broke support. Actually, 2 weeks ago, we broke support. I don't think that this holds. I think this is going to fade. If we close above, again, we keep coming back to this 21 period EMA weekly time frame. We close above it, the dollar is going to be in a bit of trouble. So what we'll do here is just set up an alert. Yen. The yen just continues to remain under pressure, even with yields over in Japan really just skyrocketing. We appear to have a 30-minute breakout. We may get some buyers moving in here on the Japanese yen. If you get euro up, Japanese yen up, there's no way that the dollar can move up as well. You may get a reversal on the dollar, or more weakness on the dollar, I should say. Okay, let's go to 15-minute chart. Let's talk about precious metals. I'm intentionally leaving equities for last. Precious metals. Okay, so last week, we began buying gold back in 2015, the physical. Last week was the first time that I ever sold some physical gold. We sold about a third of our position on strength. So it really hasn't moved. Actually, we got out the highs of the week, just shy of it anyway. Here's the daily view. Sold right back here. We're having a breakout yet again. Gold is extremely technically overbought. And that's one of the primary reasons that I did some selling here. RSI on gold on a monthly chart is at 93. Doesn't mean it can't keep going up higher. It's a monthly chart. It takes a while to unwind that. But it's just wise with the profits that we have to make those profits real. So we have some it was a good way to start off 2026 with a win. And let's check in with silver. Silver up 6.5%. Crazy. Crazy. Let's check in with palladium. It was even higher. Palladium up 3.3%. I've been thinking about trying to get back into this. Yeah, I mean, this is sweet. I think palladium is going to be the next to run. Very nice wedge formation. You have stochastics, which are beginning to hook up. They're not up yet, but palladium looking very attractive here. Back to a 15-minute chart. Let's check out PL. Platinum. Platinum up 2.64%. 4-hour view. This also looks really, really good. Here's the daily view. Platinum, outstanding. Very, very nice. What else do we need to check in with? I want to check out copper. Copper was going parabolic not too long ago, and it kind of fell off my radar. HG, yeah. HG. This is a daily chart. Copper up at current 1.26%. This could have been an overshot double top, but it won't be a confirmation breakdown until we make lower lows. So warning flag on the track for copper. I mean, the trend still looks very good here, but clearly you have topping action at resistance on copper. Really quick walkthrough of agriculture, ZW. Let's go to the weekly chart. Very nice on wheat. Wheat broke out last week. Is this week or last week? This is last week's price action. I would expect a pullback and follow through on wheat. Huh. That wasn't supposed to happen. I said it wrong. Above. Okay. All right. I just want to see something here. I might be interested in selling some premium on they're tradable options on Thinkorswim on wheat. I like the setup here. So what I look for, this doesn't have very high IV rank. It's only 34%. But what I also look at is the setup, right? We don't buy a stock. We don't buy the commodity. We don't buy the currency. We buy the setup, right? So what's the setup here? We have a nice little W formation forming. We have higher lows. We have several weeks of where they tried to take wheat down. It's only been bid back up. That's a sign of support below. And that's the type of product I would like to sell premium in to try to generate cash flow. So, members, stay tuned. We may be selling premium here on wheat. Let's check in with ZC. For those folks just joining in, we have not gone over equities yet. Corn, train wreck, avoid, do not likey. Soybeans, nothing happening there. Live cattle, under pressure. Under pressure. All right, let's check in with equities. Let's go with the E-minis first. E-minis are down 0.94%. And they were down much lower today. NQ down 1.23%. Again, down much lower on the day. We have come off the lows. RTY down 1%. Small caps have been in fuego of late. Mid caps down 0.90%, trying to make a comeback. So equities under some pressure here. So we want to kind of pause here and just highlight a couple of things. One, earnings season has begun. I like to call it silly season because of all the shenanigans they do in the financial news media. They'll take news that's, okay on the surface. They beat on EPS, your revenues fell, and they'll make it sound like a grand slam, get you excited running in to go buy the stock, and all of a sudden you get a rug pull. And people go and wonder why. They told me on CNBC that the earnings were great. Yeah, well, the revenue fell. The forward-looking guidance may not have been well. They don't give you the full picture. They don't give you context. That's how they screw you. It's lying through omission. That's what they do on these financial news media channels because they have one job: to sell ads. In a bear market, their ad dollars dry up. In a bull market, well, they get more ad dollars. So follow the money. Let's get to it. Okay, so I'm going to go over a lot tonight, valuations wise, but one of my trading idols, the great Jesse Livermore, the stock market is never obvious. It is designed to fool most people most of the time. Exactly right. Exactly right. So I'm going to go over some charts tonight that make you think that it's a no-brainer. You got to go short in this market. Be careful. Be careful. Okay, because just when you think the stock market can't go up anymore, it does. And the same thing is inversely true. Just when you think it can't plunge another few percentage points lower, it does, right? And it's after you ask that question of yourself, can the stock market go any lower than it has right now? And then it does. That's when it's probably time to buy because that's capitulation. And the same can be said for the equity markets. Now, starting off with economic data, nothing coming out tomorrow, and it really doesn't matter. We're going to get some GDP numbers coming out on Thursday. The PCE, this is a delayed report. This is the Federal Reserve's favorite measure of inflation. So if there's one report that matters most here, that's probably going to be it for the week. And Friday, we get consumer sentiment and S&P services and manufacturing PMI. But these are going to be backseat to earnings. Earnings are going to matter most. Tomorrow in the morning, we're going to get 3M. We're going to get some banks, more regional banks this week. You had the money center banks last week. Netflix comes out after the bell tomorrow. Netflix stock has been very, very weak of late. I think it's about 30% off of its highs. Carew comes out. It's a very good company. Wednesday, J&J, Halliburton. We've spoken about Halliburton of late. They'll benefit from Venezuela. Ally Bank, Schwab, more regionals. After the close, we're going to get more regional banks, a pipeline play. Thursday, before the bell, consumer staples, stock, P&G. This is going to be interesting. Freeport McMoran, copper, gold, GE Aerospace, Abbott Labs, Nova Gold comes out. Remember, with these gold stocks, they're going to benefit from a couple of things. One, their primary input cost is oil. Oil is very, very low. And a byproduct of mining gold is silver. And silver prices have gone parabolic. So these mining stocks are cash flow machines right now. Continuing, after the bell on Thursday, Intel, Alcoa, some transport plays, Alaska Air and CSX, that's a railroad play. Friday, not much coming out, just more banks and an energy play. And you got Ericsson. They're kind of like a has-been stock. Fed Watch tool, probability of a Fed Watch rate cut in January does not exist. March does not exist. April does not exist. It's not happening. Why do you think Jay Powell is going to be in front of a grand jury? They want him out sooner rather than later. So the probability of a rate cut goes up in June. Why? Because President Trump's handpicked successor to Jay Powell will be in office. That will be his first Fed meeting. And the stack is going to be decked in favor of doves on the Federal Reserve Committee. So expect rate cuts, expect quantitative easing. They're going to try to do it through the Treasury. Actually, I should say this. They're going to do it through Fannie and Freddie Mac by having them buy mortgage-backed securities. That'll help free up some capital for housing. The problem is that once you start getting the government in charge of manipulation of rates, the prices of homes are probably going to go up. It's not going to bring down that price of homes. It's going to make them go up. So I don't like the government intervention into the free markets, even with the talk of credit card interest rate forgiveness. I mean, not forgiveness, capping it at 10%. I think that's a crazy idea. It's a crazy idea because whatever you cap, you get less of. So in the case of you want to cap a bank's ability to charge more than 10%, I'm not saying that it's right that they charge more than 10%, but they get it. You're going to get less credit because they got to get paid for risk. Getting charged 27, 28% is beyond bananas, but they're getting it. That's the free market. Okay, Schiller PE ratio, we are at weekly highs not seen since 2000. And this is the rear view mirror view of earnings, right? Not forward looking. This is in the rear view mirror. Now, another view of how expensive we are is price to book. Price to book, we are at all-time record highs, well beyond 2000 at this point. So we're just shy of 2000 now. We are on the rear view mirror view on a PE multiple basis, on a price to book basis, well beyond 2000. And on the Buffett indicator, we are at insane nosebleed, give me a parachute levels. Because the only word that applies to this chart here, to me, when I take a look at it as a contrarian, is one word, that is unsustainable. But remember, we're going to go back to this adage. These are all pretty bearish charts. The stock market is never obvious. It is designed to fool most people most of the time. That's why when you get a false breakout on the stock market, that's kind of like a tell, right? You get a breakout and then it fails. That's a sign that, aha, they lured enough bulls in to get a breakout, yet there were enough bears out there to cancel out that transaction. That's a sign that the market is getting ready for a pullback, if not a correction. We really don't have that yet. Some seasonality, I found this interesting. Some seasonality data. S&P 500 mid-year seasonality pattern. April through September, period of caution. Chop, pullbacks, volatility. September, December, window for growth. This is when portfolios expand. So this is a midterm year. And you could see, I don't know how many years this goes back. How many years does this go back? This is a pretty good sampling. It goes back to 1946. So this is pretty hard data for us to reflect back on and say, okay, if we get polling news that is not good for the power in charge, or we get these rhinos that come back into power, that will not be good for stocks. Right now, the stock market happens to like the power of the presidency. I don't care about your political persuasion. The stock market is speaking right now, and it likes what it sees. Therefore, any disruption of that will not be good. Also this week, we're probably going to get the announcement out of the Supreme Court about the legality of the president's tariffs. So whether he has the right to do that. We up until 1913, 1917, we were a tariff-based economy. So I don't know how it could be illegal when we were doing it for well over 100 years. But this is the world we live in today. Bananas. That's where we live in, a third world banana nation right now. So valuations on a forward-looking. We're not just blinded here. We're not looking in the past. we're not just looking at current, we're looking at the forward as well. But this is kind of like, a wish list type mentality of looking at valuations, forward-looking projections. I don't like projections. The trailing 12-month PE ratio for the S&P 500 is 28.4. It's above the 5-year average of 25 and above the 10-year average of 23. Not horrific, but not good, especially when you have the Buffett indicator in its Wile E. Coyote moment. Beep, beep. Here's the problem with this market as well, is that the Japanese yen carry trade is one of those lines of liquidity to help keep our markets alive. And that one is drying up. It was great to borrow at negative rates over in Japan and then buy stocks or treasuries here in the United States, and you make money with free money. That's over. That's over. The market still hasn't gotten it yet. You borrow it, 2.79%. It's no longer a no-brainer when you have valuations in lofty levels as they are right now. The bond market under a little bit of pressure, that you could just take this 2.279% loan and then bring it over to the United States and put it to work. So, and make money. That risk is, you could still do it, but you got more risk. International stocks could be set for some significant outperformance if Gen AI narrative starts to unravel. I agree with this, but with a caveat. Caveat is, I must have had too much salt today. I apologize. The caveat is that two things. One, if U.S. equities break lower to include Mag 7 or Gen AI stocks, the probability of a correlation of it will actually be causation and correlation of emerging markets coming down with U.S. equities. The however is that our strategy is that when we do get a bottom in any sell-off in the equity market, and if that bottom is caused in particular by Fed rate cuts, fiscal spending, which is going to be driven by debt spending, and or your quantitative easing, the buying of longer dated securities out of the Federal Reserve, you're going to see a greater rally in emerging market stocks. They'll recover far more rapidly. And the why behind that is a couple of fold. One, if it's the Federal Reserve that is buying back U.S. Treasuries and you have spending which is just on autopilot, as it is right now, but even worse, that's going to kill the dollar. And the debt in emerging markets is denominated in U.S. dollars. So it's like a tax cut for emerging markets. So that will be the primary driver of emerging markets recovering earlier and having far greater return on investment than U.S. equities. So when we do get a bottom out here, we already long of emerging markets, but we're not big yet. But if we get that pullback and correction, we will be getting a lot bigger once they go back to QE. That's what we're waiting for. And technically, they already have gone back to QE. Now, one of the things, we're talking about the Mag 7 here. What are they benefiting from? They're benefiting from these data center build-outs. And so far, and I checked this is fact. Already 25 data center cancellations and postponements this month, expecting to see 100 plus month towards midterms. And this excludes local county moratoriums. So for whatever reason, they're putting these data centers on hold for whatever reason. I don't know why, but I could do more research. But this is going to be a problem for the Mag 7 names. Now, this is kind of both bullish and bearish. I'll talk about it. The short interest on the equal weighted S&P 500 has never been higher. Okay, so what they want you to read into this, I'm interpreting it this way, is that they want you to think that the short interest being so high on the S&P 500, the equal weighted, the RSP, that it's a bearish thing. It's a bearish thing when the RSP finally breaks. All it is signaling short sentiment. In reality, what this actually is in the short term is actually bullish. Why? It's because every time, like right here, you got this false breakdown, and then you have all these stop loss orders that were set above these highs. You break through them, and you have that much short interest that now needs to cover. They blow out those stop loss orders. So the more shorts that you have, the more powerful any breakout is, because they need to cover. They're going to trigger those stop loss orders. So they may be right directionally. The problem is, I got to say this, they may be right directionally some point in time. So this is why we've been deliberate when adding to our short position. Actually, we now have a 25% hedge on our short position. We know where we're going to take that hedge off if, in fact, we do get a break on the triple Qs, of which you're short. And remember, the triple Qs put in an all-time high back in October. No follow-through yet. And the month of February, it's only up about 50% of the time. So it's a coin flip month. So we're looking forward to February. Now, what else we like, but only when we get a pullback, and when we do get that pullback, that correction in the market that takes the froth off, we're going to be looking at emerging markets. We already went over that. But we're also going to be looking at the small caps, even the mid caps. Why? Because if yields, the 10-year yield, 20-year yield, 30-year yield are all pulling back, that's going to bode very, very well for small caps and mid caps, because they need to go to the banks for financing. So we'll be buying those names, and their earnings per share are rapidly expanding. So it's going to be small cap, mid cap, and emerging markets once we get out of any pullback in the equity markets. I don't know how big that pullback is going to be. All I know is this: I do not want to be short this market in May. Probably I don't even want to be short this market in late April, because you have a new Fed chair and he's going to be dovish, guaranteed. So this chart here, we talk a lot about liquidity, because it's liquidity that drives the market. So what is liquidity? Liquidity is the Federal Reserve buying back treasuries, cutting interest rates. That's liquidity. The Japanese yen carry trade, that's liquidity. Borrowing in yen, that's money that could be put to work in the United States or Europe, wherever. But what also is liquidity is this: high yield debt. HYG, you can bring up JNK. High yield debt, I prefer HYG. High yield debt is very, very strong. This is a powerful chart. And you can see that we've broken through a couple of major in blue, this dashed. By the way, we're using TrendSpider, 35% discount code below. Discount code below. This line here in blue is the quarterly resistance level. The line in green is the weekly resistance level. In the past 2 weeks, we've broken through my downtrend channel. I drew that manually in white. Quarterly resistance and weekly resistance. We are now at another weekly resistance. This is a pretty powerful chart. The problem is that the spread, the risk that traders are taking for buying high yield debt relative to the safe haven of treasuries is very, very thin. Very, very thin. So what you need to interpret by that is that high yield debt relative to treasuries is very expensive for the risk. So while this is a powerful looking chart, I would not go buying this, even though it looks like it's probably going to go up. And I predict that once this breaks, that is going to be the straw that breaks the camel's back. I keep doing that. Third time's a charm. Okay. So high yield debt still looking good. Still looking good. I can't take it away from him. Looks daily chart, still looks like it wants to go up. Heck, we even have a Bollinger Band squeeze going on here. Very powerful chart. I think it still goes up. But man, when this thing goes, it's very correlated with U.S. equities. High yield debt down, U.S. equities down. It's all about liquidity. You start drying up liquidity, the stock market goes down. Let's say hello to folks. LCDR Post, good evening to you, sir. Talon, welcome. Paul, good evening. Scott Bassett said he has other ways to make money on imports if the Supreme Court strikes down tariffs. If they strike down those tariffs, I think it's going to be a bloodbath. Okay. Sorry, Bob. My wife has her Ducks jersey. All right, yeah, hey, happy wife, happy life, pal. No worries. I feel your pain. Okay. That's it. 6:38. We covered a lot. Let's go to our chart requests. And I'm getting inquiries about when is the new site going to be launched. We locked in the, I did a poll last week. We locked in some designs for the conviction meter. That's done. It's locked in. Now they're coding it all up. Then they connect Alpha Vantage. It's where my quotes are going to be coming from. And they're going to connect TrendSpider. It's at this point we're done with a lot. A lot of the hard work, the back end work, the programming, that's done. Now it's just a matter of grinding it out page by page, task by task, and there's a lot of nuances that we're doing. But we're very, very close to launch next couple of weeks. Ideally, I don't want to give a hard date because you never know. Something goes wrong, or there was a big debate about this design of the back end conviction meters, and one guy wanted me to do it like very, very sterile, meaning no color, no. I'm like, what are you talking about? There's no fun at all in this. It feels like I don't want it to look like Obama's presidential library. Keep a little bit of color and warmth in, for Christ's sakes. So I polled the audience. They liked it. I went with it. I signed off on it, and it's locked in. So members, whatever you saw, as a matter of fact, I could show it to you. Here it is. So basically, this is the conviction meter just measures how big are we into a trade. So these are the different levels by member. If we're short, it'll say short. In this case here, it just says long. Is the stock that you're watching, is it a 7% dividend club? Is it an investment? Is it a swing trade? Is it an extreme trade? So this will help you if you went on vacation for 2 weeks or you just joined. You'll be able to check in and say, okay, they're increasing size, they're long, and they're 25% invested or whatever it says at that point in time. The symbols here means that rocket ship means we're building. Anchor means that we're good. We're flat right now. Maybe we'll reduce. Maybe we'll add more. Maybe we'll never add anything. Maybe we'll just long forever. And wheat, that means harvest. We're taking some off the table. So This is what's coming. This is being coded out right now. And if you like it, give me a thumbs up. I'd appreciate it. Or drop a note in the comments. A lot of work went into this. And we're the only, if there's, I don't consider myself a trade alert service, more of a analytical service. But in the trade alert realm, nobody has this. There's nobody out there that has this. And I made the software. I created it. And I am meeting tomorrow with TrendSpider, their CEO, and we will be talking about integrations into the new website. All right, we don't have a lot to go. Oh, we do. 9 comments. All right, here. Okay. So let me go through these. We got Talon. Franklin did his research. Franklin, thank you. Paul. Hey, Paul. Miser. All right, let's get to it. Let's do it. What the heck happened to the page? I lost the page. All right. Let's go. We will be using TrendSpider. Again, folks, use that discount code, 35% off. Get all these automated trend lines and a lot more. Sidekick is their AI product, and it's really, really good. SMCI. I stopped following SMCI. Have they ever filed their, I guess that's what Franklin's talking about. I have owned it since October 24th, right before the stock split. They still have some accounting issues going on, huh? They finally filed that delayed 10K? All right. Okay, so TrendSpider, Super Micro actually looks pretty good here. We've hit support. Let's go to the weekly chart. Let's overlay some trend lines. I think this is going up. RSI hooking up. Volume last week was very good. Primary resistance level number 1 at around $44 a share. After that, around $47.50 per share. Daily view. Nice breakout on Friday. SMCI buy. Don't forget they have earnings coming up. Next chart up, CMS. Energy's doing a lot better lately. You're going to have resistance right up here at around $73 a share. Volume last week, good. RSI hooking up. You always want to pay attention to this. Higher lows. Nice Bollinger Band squeeze setting up on the daily chart. I think you could open up a position here. It's breaking out. If you want to look for a area of retracement to add or open, that would be down around $70 a share. We never did get a pullback and a retest. So if you open here, I would stay small and then add more on a retest. And man, if you get follow through to the upside, I would lean into that strength. So CMS looking interesting. Let's see how it closed out. You have 2-hour chart, 3 bars of topping action here. I think you're going to get a pullback here on CMS. And don't forget, let's check in with the futures market. You got NASDAQ down 1.18%, E-minis down 0.96, small caps down a percentage point. So going into tomorrow's market environment, you may want to wait for that pullback, Paul. VG. Looking interesting. It's under accumulation by institutions. Big volume. Nice breakout week. You're going to have resistance right up here at around $10 a share. I'd be fine with nibbling here. But I think you need to be a more aggressive buyer on a close above. I'd be looking at $10 a share, $10.10 around there. You give me a close above that mark, I would become a lot more heavy in the stock. Obviously you want to, with any of these stocks, you want to check out valuation. Where do we stand? Price to earnings, price to book, price to sales. Are you getting value right now? The value stocks that we picked up in 2025 are doing outstanding in late 2025 and into 2026. Boeing, I wouldn't call that necessarily a value stock, recovery stock, more like it, but Lyondell Basel, a few other stocks that we have are value stocks, UPS, and they're doing very, very well. And they're throwing off a big fat yield as well. So nobody wanted them, we bought them. So, excuse me. This is looking good, bullish. Sean, SLVP. A word of caution here. So what we're looking at is a very, very healthy uptrend, right? The problem is that we ripped through the upper band of the uptrend channel where we've hit it in the past, like back here, you got to pull back here, you got to pull back. We didn't quite get up there this last time. Now we're above it. It doesn't mean necessarily we're going to crash back down into that channel. It can continue up higher, but the only way I would feel comfortable with adding more to a trade or initiating a trade is on a retest of this breakout point, call it $41 a share, and then follow through. Because we need to know that this is now no longer resistance. It must be proven to be support. The only way to do that is for OCD technicians like me to come in and say, okay, let's watch the retest. Let's watch the follow through. Does the retest hold? If it fails to hold $41 a share, you're going to see sellers move in. They're going to short it. So just be careful. Very strong, healthy uptrend. I like it for the longer term, but be careful here. It's extended. It does look like it wants to go up higher. I have to say that. Next stop for me looks like it's going to be $43.60. Good volume on Friday. And that appears to be about it. Let's just check back in with the futures action. You are welcome, Paul. Anytime. Lee Cable, welcome. All right, so the futures, not much has changed here. We have the 10-year. This is a problem. That 10-year yield is moving up nearly 3/4 of a percentage point. That's a big move. Volatility. Holy sugar. Family-friendly show. I gotta watch my language. This is clearly a threat. What it appears to be setting up here is a higher low on volatility. Right now, this is another like the fourth time we're talking about the 21 period EMA weekly chart. And we have volatility trading above the 21 period EMA. The week is still young, right? So we only have one trading day in the books thus far in the futures market. But if it closes above that 21 period EMA, that's going to spell trouble for equities. But we have 4 days to go here. So a lot can happen, especially with volatility. And that's it, folks. Sean, you're very welcome. Folks, again, I hope everybody had a great weekend. Don't forget, TrendSpider 35% off. And everybody have a profitable trading week. Thanks for being here. Like, subscribe.